Hello and welcome to the next part of Investing for Generations. Today I want to talk about a not so known oil stock, and I will tell you if this is a good investment and why. So let's start. Before we start, don't forget to subscribe, like and share and comment, of course. Thank you. Today I want to talk about the Imperial Oil Limited. As I said, I think it's not so known, not so famous, but I will tell you why I think this is a good investment. So we will look into the history of the company, we will talk about the financials, about the price, of course, and then after all, we will come to a conclusion. The company was founded in 1880 in Canada. It's Canada's second biggest integrated oil company. The oil company do everything from explore to produce to transport and also make the products. A very special thing is that the big oil company Exxon, one of the really big players in the world, has a 66% stake in the company. The company at all have 26 billion of revenue. Then let's take a deeper look into the financials. First of all, take a look at the dividend. Imperial have a dividend yield of 3.96% and a very small payout ratio of 40%, which is very nice. And this really looks like the dividend is safe, even if we have the problem with the oil price and the very down oil price right now. Also nice is that the dividend growth rate over the last 5 years is over 6%. Overall, a very solid dividend stock. As you can see, the revenue is very much upside down, and this is all over the numbers, and this is caused because of the very high depending on the oil price, and I will show you later also the oil price, and there you can see how volatile this market is, and so are the numbers of Imperial. Just the same you can see with the margins, but after all, the company earns money every year, even if the oil price is down, like right now because of the oil crisis and the price war in this market. Here I just want to show you a picture of the long history of the oil price. It's not already up to date, but at least you can see how volatile this market is even over the last 150 years or so. And yeah, this is just so it's not abnormal what happened now, and I guess sooner or later we will see oil prices again up to 50 or 60 or even $80, but by now they're around $40, and it's not so easy to earn a lot of money at these prices. Also not for Imperial, but they still do, and that's a good sign. Let's take a look at the balance sheet. Imperial have a very solid, superb balance sheet. For example, here is the debt equity, and the debt equity ratio right now is just at 0.21. This just means that the shareholders' equity right now is so much higher than the long-term debt. So it's 17.5 of equity to 3.7 billion of long-term debt. That's very, very healthy. And just the same we can see when we look at the current ratio, which is at 1.35, and also when we look at the assets and liability ratio, which is at 2.4. So all of this just mean that this company is very healthy and have a very financial solid fundament. And on top of that, we have a very, very good price book ratio of 0.69, which just means that you can buy Imperial right now way under the book value. And this is a very good sign, even more as an investor and as a long-term investor. So if I don't miss anything, it looks like Imperial right now is very, very cheap. Let's take a look at the management. The current CEO of Imperial is Brett Carson. He has a very long history in the sector. He worked for Exxon. As I said, has a 66% stake of Imperial, and he worked for Exxon since 1983 in different positions. And then he took over as the CEO of Imperial on January 1st of this year. So it looks like we have somebody with really a lot experience in the oil business. So this makes me confident that the company is in very good hands here. After we found out that Imperial looks cheap and is under the book value right now, and that the balance sheet is very nice, yeah, just look at the current price, and therefore we go to Yahoo Finance. So the current price of Imperial right now is a little bit over $17. I bought my shares at $15.35 on May 20. So my position is very new, very young, and a little bit up in the plus. The intrinsic value, my very conservative intrinsic value, is $20, and the margin of safety, so it's around 15% from the current price. As I said when we talked about the book value, for me it looks like this is a very good opportunity to buy this company. But of course, all depends on the oil price, and of course nobody knows where this goes in the short term, but I guess in the long term also the oil price will go up, because I think this price war in the sector don't last forever. We see this also right now. It looks like it could finish, or it's almost finished. And also when we go out of recession, maybe the oil price will go up. However, I don't predict the stock market, I don't predict the oil price also. But in the long run and in the mid-range, I would say we will see at least oil prices around $50 or $60. And with that, also the stock prices of the oil companies and then also of Imperial should go up too. What I like really about Imperial is this very solid balance sheet. So even with the very low oil prices, this company is far from the verge of bankruptcy and can stay this for a long time. And this makes me very confident that this company in the long run will be a winner. And so we will see if this turns out good. So what's my conclusion about Imperial? My conclusion is that Imperial is a very interesting stock right now, which is under the intrinsic value and way under the book value, with a very solid dividend. And the negative, of course, is the high depending on the oil price. And so this stock goes up and down with the oil price. I just picked Imperial because the balance sheet is very, very solid. And that's a difference to a lot of other companies in the sector. So if you look for other companies in the sector, you will find companies with very bad current ratio, with a bad balance sheet. And I think if the low oil price will stick for a long time, some of these companies will face bankruptcy. And I can't see this for Imperial, at least not in the next years. So I think they can stand even a low oil price for long term. And this makes me very confident that in the long term, this will be a very good investment. Like always, at the end of the video, I want to take a short look into my portfolio and show you how it works right now. Here we are again at Portfolio Performance. This is my app to just follow all my investments and to have an overview of everything. And yeah, we can see that from the last time, from my last video, my shares, my stocks, uh, yeah, got a bumper with a little crash we had right now, the last 2 days. But it still looks very green. And also Imperial is 10% up, and there's a dividend missing. There was a payout day, the ex-dividend day, and the dividend will pay it in the next few days. So this percentage will go even up a little bit more, and that's very nice. And we can also see that when we look here, I just have very, very small position of Imperial, but I guess if the stock market still is so up and it looks a little bit overvalued, and at the same time Imperial will stay so much under the book value, I guess I will even add to my stocks and make this position a little bit bigger. That's it for today. Thanks for joining me on my path to financial freedom, and I hope you enjoyed. And we will see you the next time with the analysis of another stock. Before we finish, don't forget to subscribe, like, and ring the notification bell so you will never miss another analysis of a stock out of my portfolio. And as you see, it looks very good, so maybe you will miss something. So, bye bye, take care, see you the next time.